How does local income tax work living and working in different cities? Imagine earning a paycheck and wondering why your take-home pay varies depending on where you live and work. It might seem confusing at first, but understanding how local income tax operates can help you plan your finances better. Local income tax is a tax cities or towns impose on the income earned within their boundaries. It is separate from federal and state income taxes and helps fund local services like schools, roads, and safety programs. The rates and rules for local income tax differ widely from city to city. Some places have a flat rate, meaning everyone pays the same percentage, while others use a progressive system where higher incomes are taxed at higher rates. If you live in a city that charges local income tax, you usually pay it on your total income, no matter where you work. If you work in a different city that has a local income tax, you might owe taxes there too. Many cities requiring non-residents working within their limits to pay local income tax on the income earned there. When you live in one city and work in another, you could be subject to taxes in both places. However, many states and cities have agreements called reciprocal agreements or tax credits to prevent you from paying twice on the same income. For example, if your work city charges local income tax but your resident city also charges it, you might pay the tax in the work city but get a credit on your resident city's tax bill. This way, you avoid paying double. It is important to check the local tax laws for both your residence and work cities to understand your obligations. Your employer usually withholds local income tax from your paycheck based on your work or residence location, depending on local rules. This withholding system helps you avoid a big tax bill at the end of the year. Knowing your local income tax rates helps you plan your budget more accurately by understanding what will be deducted from your paycheck. If you are thinking about moving or changing jobs across cities, compare the local income tax rates and rules to see how they will affect your take-home pay. Keep an eye on your pay stubs to verify the amount withheld for local taxes and review your annual tax returns to make sure you are not overpaying or underpaying. You can also use tax credits or deductions related to local income tax to lower your overall tax burden. Consulting a tax professional or using reliable tax software can help you navigate complex situations involving multiple local taxes. For example, in New York City, residents pay a local income tax with rates ranging from about 3% to nearly 4%, on top of New York State income tax. Non-residents working in New York City may also owe this tax. Knowing these rates and how they apply helps residents and workers plan their finances and make the most of their income. To sum up, local income tax depends on where you live and work. When these locations are different, you might owe taxes in both places, but often you can avoid paying twice through credits or agreements. Being aware of local tax rules and rates is a smart step toward managing your money wisely and making informed financial decisions.